Okay, so 2020 tax season begins a little later this year, but if you are a South African who earns most of your money abroad, you may need to start considering a number of changes in the tax regime slightly earlier than the rest of us. As it currently stands, according to our Income Tax Act, a South African resident who is an employee and renders services outside the country on behalf of an employer for longer than 183 full days in any 12-month period can be granted an exemption on their tax. Now, it looks as though new rules will give you a break on that first R1,000,000, but we're going to be seeing that exemption might be falling away. And Nicolas Botha is a senior financial immigration specialist at Tax Consulting SA and joins me to help us understand this morning. Welcome to Breakfast with Refilwe, Nicolas.
Hi, thanks very much for having me on the show.
Of course. Please won't you help us understand how the exemptions and how things will affect whom in this change?
Yeah, so basically South African expats were able to claim Section 10102 exemption. That's the 183 60-day rule. In the past, that allowed you to fully exempt your income. What's happened now is that's been amended to only allow for exemption of the first R1,000,000. The surplus of the R1,000,000 that expats are earning is then going to be taxable according to South Africa's normal tax brackets, which obviously places a lot of expats in a peculiar predicament.
Do you have a sense of the proportion of expats that might fall into that bracket from a numbers perspective?
Yeah, so I mean, we're dealing with quite a few clients at the moment, numbers in between the hundreds and thousands. Majority of them are sitting in that surplus, obviously with less favourable exchange rates. And also what's taken into account is also your benefits. So anything such as travel allowance, housing allowance, schooling allowance, any security protections, especially for those working in Middle Africa, that's all coming into play, taking into play when it considers your R1,000,000. So obviously they're quickly surpassing that.
Sure, I can only imagine, particularly because most people will also be earning in hard currency, obviously when they're doing so abroad. Out of interest, I mean, do you have a sense of why this exemption has been taken away? Is it just our desperation to find sources of revenue?
So from Treasury themselves, what they did is they cross-referenced South African expats, so obviously immigration stats, and compared it to the compliance within tax returns. So those who have formally immigrated, as well as actually checking if people are claiming Section 10102 correctly in the tax returns. What they noticed was that there was a vast difference between the two. So obviously immigration stats and people being compliant. So it was almost a bit of a scare tactic to wake up South Africans to correct their turns and get compliance. But obviously, as we all know, that we are under budget, and expats are earning a lot, so they perhaps want a piece of that pie as well.
It's a combination. I mean, there's not a lot of pressure points left amongst taxpayers, I suppose. But to your point, Nicolas, I mean, if the compliance was not really strong, then it's important that they get that right as well.
Exactly. So I mean, with the cases we're dealing with, we've noticed that non-compliance statement is most definitely correct.
Okay. And so making sure that they have a person like yourselves, I suppose, on board is going to be the easiest way for us to manage this for the first year, yes?
Yeah, definitely. So, I mean, what we do is we just make sure that everyone is up to date and compliant. And then obviously, if they are correct in not declaring their foreign income, we assist clients with formalizing that, showing that they're in fact non-tax resident and there's no claim on their foreign income. But obviously, it's dependent on each person's situation.
Because in the main, I would say in other countries, if it's the under 183 days, they're not going to be facing a double taxation, right? It's not as if that country is going to be taxing them very heavily. Is that right?
It obviously depends on the country. So each country has their own tax rates. So some countries are higher, some countries are lower. And then obviously you look towards the double taxation agreement to see where you can claim tax credits so that you're not being double hit.
Okay, good. As long as that option remains available. Nicolas Botha, thank you so much for helping us clarify that. He's the Senior Financial Immigration Specialist at Tax Consulting South Africa.